Welcome to the Knakal News Network. The Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hello and welcome. I'm Elisa Berlin, Director of Sales at Massey Knakal. Welcome to the Knakal News Network. Today, I'm here with Bob Knakal, Chairman and founding partner of Massey Knakal. We'll be talking about the investment sales market at the end of the third quarter. Bob, what's happening in the investment sales market?
Well, Elisa, in the third quarter of the year, we had about $8 billion of investment sales activity. And if we annualize what's happened during the first three quarters, we're on pace for a little over $30 billion in sales. Unfortunately, that is running at about 26% below the $41 billion we had last year. It's important to remember that we had a capital gains tax impact that made last year an artificially high year. So if we look back at what we were doing in 2011, we're way above where we were in 2011, about 8% higher in terms of dollar volume if we continue on this pace.
How about the number of buildings sold?
Well, as you know, that's the metric that we think is much more indicative of market activity than dollar volume. So in the third quarter of the year, we had 996 properties sold, so we're on pace for about 3,200 sales for the year. That's running also about 20% below where we were last year. There were 4,066 properties sold in the marketplace last year. And again, a lot of that had to do with the capital gains treatment. So if we look at where we were in 2011, we're about 46% higher than the total we had in 2011. So in terms of the number of properties sold, we're feeling great right now.
Let's talk about transaction size. Where do you see the transaction size this year versus last year?
Well, interestingly, we were expecting a lot of very large transactions in 2013. In the last 2 years, we haven't had any transactions over $1 billion. In fact, last year, the largest sale was $750 million. But so far this year, the average transaction has been $9.3 million. And in fact, in the third quarter alone, that average was only $8.1 million, which is down about 8% from where we were last year. And if we look at pricing, we see that pricing is also down slightly because of rising prices in the Manhattan market. Investors have increasingly been looking outside of Manhattan for properties because of a disproportionately large share of the total sales occurring in the outer boroughs, which are typically at lower prices per square foot. We've seen a market-wide price per square foot that's less than last year, but in actuality, values are up citywide very, very significantly.
You talked about the submarkets outside of Manhattan. Which markets are performing the best?
Well, actually, northern Manhattan is far and away the most active of the submarkets of the city. We've already had, through the first three quarters of the year, $1.3 billion in sales activity in northern Manhattan. That already eclipses the $1.1 billion that occurred in all of 2012.
Which type of property has been the most active?
Well, the land market has really been on fire. Normally, office buildings dominate dollar volume, and they are again this year, but land has made a significant increase. That 17.2% share is more than double what it had been in 2009, 10, and 11. And if you just look at third quarter activity, the dollar volume of development sites and land represented 22% of the total dollar volume. So without a doubt, the land market is something that investors are really flocking to today. In summary, the activity in the investment sales market thus far in 2013 is below 2012 levels. On an annualized basis, the number of sales is about 20% below where it was last year, and dollar volume is running about 26% behind last year's pace. Average transaction size overall is also slightly lower, but that's because increasingly investors are seeking opportunities in the outer boroughs.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.